Welcome back, everyone, to GAF University. I'm Colby Cox with Global America Financial, and today we're going to be talking about the Focused Income Annuity from National Life. Now, if you don't remember the difference between an income annuity and an accumulation annuity, you need to click this link up here so that way you can refresh yourself on the difference between each. If you're good to go, let's get started. So the focused income is a single premium deferred annuity. Okay, you can have different plan options, 403B, Roth, IRA. There are multiple crediting strategies that we'll look at here in a second. One nice thing about this product is it has a rate booster. A rate booster is where if you're willing to pay a fee that we'll take a look at here in a second, you can bump up your caps and your par rates. Okay, so you've got standard and rate booster, and if you're willing to pay for it, you can have higher caps and pars. We'll look at that here in a second. The issue age is 45 to 85, minimum premium being $50K, maximum being $1 million. You might be able to get more than that, but you got to get approval from National Life. No promises, but there's potential. You have a free look of 30 days. You can take free withdrawals up to 10% after the first year. Okay, so if I've got 100K after the first year, I can take up to 10K without penalty. You'll just have to pay taxes depending on qualified or not. Withdrawal charges, it's a 9-year surrender. In year 10, going down to 0. There are 2 riders, a nursing care and a terminal illness, that we'll look at that are no cost. And the death benefit is the full accumulation value at death of the annuitant. So again, if you're getting an income, but you're not getting you have no accumulation, and you pass away, there's nothing left unless you have a joint payout. So one of the benefits of this annuity is the 2 GLIR options. You've got the standard GLIR and you've got the no charge GLIR. Standard GLIR does cost 1% of the accumulation value, but you get a 12% benefit-based bonus to bump start your income benefit base. The no charge doesn't cost, but there's no benefit bonus of 12%. Both are 4.5% simple roll-up. The income availability is policy in force 1 year, and you have to be at least annuitant age 55. You do have an income doubler where if you can't perform 2 of the 6 activities of daily living, you can double your income for 5 years. We'll look at that here in a second. You do have an increasing option if you want to do a level benefit or an increasing benefit, talking about income. You can do joint income. The rider cancellation after the 10th policy year. And like I said, for the standard GLIR, it costs 1%. For the other one, nothing. So doubling your income. If you can't perform 2 of the 6 activities of daily living, okay, which are bathing, dressing, transferring, toileting, continence, and eating, you can double your income. Your policy does have to be in force for at least 2 years to access it. But if you've been in force 2 years and you can't do 2 of those 6, you could double your income for up to 5 years or until your accumulation value is 0. Okay? Either or. The elected income is based on 1 life only. So if you're joint, it's only based on that 1 life of the annuitant. And then no withdrawals in excess of the current lifetime income have been taken. So if my lifetime income is 10K, but I've taken out 15, they won't let you enact it that year. But you can't do 2 of the 6, and you've had your policy for 2 years, you can double that income. We'll look at that when we take a look at the illustration. That income can be level or increasing, and it's your choice. Okay, so you can go level and have a consistent income until you pass away, or it can be lower at the beginning, but it can increase by 2.5% per year until your accumulation value reaches 0. Once it reaches that, it levels off, okay, and it will lock in. So you have access to your money beginning in the 2nd year up to 10% without penalty. All right, you just have to pay taxes and fees. From IRS, not from the company. And then nursing care rider and terminal illness rider, 2 free riders that come with this annuity. Again, you have to wait a year, but if you're confined to nursing care or you're diagnosed with terminal illness, you can access a portion of your accumulation value without a withdrawal charge or market value adjustment. So if something happens, you're going to have access to your money without having to pay those withdrawal charges if needed. So we're taking a look here at the rates, and we're looking at the very bottom one, fit focus income. These went into effect 3/29. The declared or fixed rate is 1%. And now we have the S&P 500. We have the point-to-point annual cap with 100% par rate. You have standard and rate booster. So again, this is the part with no fee with standard, rate booster paying an extra 1%. But if you get standard, you get 2.25%. The rate booster, you get 4.1. If you're looking at the monthly sum with the S&P, it's 1.2 for standard, 1.9 for rate booster. So you can see if your client's willing to pay a 1% fee per strategy, you could get higher potential within those strategies. You have the global balance index, point-to-point, par rate, no cap. If you remember how par rate works, depends on what the market does, you get a certain percentage of it. So if your par rate is, let's just look at standard, is 50% and the market does 10, you get 5 because you get 50% of what the market did. How much do you participate in the growth, okay? If you have the rate booster, it's 95%. You've got the U.S. fundamental balance, point-to-point par rate, no cap. Same thing, 50 for standard, 95 for rate. And then the GLEAR is required. You have to choose standard or none. Okay, and we'll look at that here when we take a look at the software and the illustration, which is what we're about to do right now. All right, so we have our illustration software here. It's pretty simple, pretty straightforward. It won't take you too long to put together, but let's just say we have a client that wants to roll over some money. So we're going to do a plan qualification IRA. We have the client here. Usually I like to put in date of birth, but for this example, I'm just going to put an age of 62. Okay, that's the age of our client. We'll just keep it as a male for right now. Now, funding and withdrawals right here on the left. Let's say this client has $250,000, so we'll put that $250. Remember, minimum is $50K, and then we have all the strategies here. Now, it does show which ones have the charge. Now, if they want the rate booster, they have to pay a charge per rate boosted strategy. Okay, so if they pick all of them, that's 4%. Now, upside's high, but they're also going to have to pay 4% every year unless they change. So let's just say we have a client here that doesn't want to do that. They just want the regular strategies. So we're just going to kind of mix it up and put it in here. Let's just go, let's go 25 here, 25 here. Let's go 15 there, and 15 there. So I've got my strategies equaling 100%. All right. But again, it depends on the client. If they're willing to pay for it, you can put some in those rate booster strategies. Then we have to come down to the lifetime income. Obviously, they have to have the lifetime income with this product, but what do they want? The charge or no charge? Remember the difference. Charge, 12%. Booster, no charge, no booster. Let's just say they don't mind paying the 1% for that booster because they want to jumpstart it. So we're going to go with the charge. And then we're going to come down here to the withdrawal amount. Make sure we click GLEAR because we want the guaranteed lifetime income. And then what age do we want it? I'm going to put age 68. Let's say that's when the client says, this is when I want my income. Okay, perfect. So I'll put A68 for age 68 through maturity. And they do want that income doubler. So I'm going to put yes. And what age do we want to start it? Let's just say 12. Okay. So again, this is just going to show, here's the income. And here's what the income doubler would do for you if you need it. It's there. So you don't have to show it, but it's a good example of showing, hey, this is how it works in that case, okay? So now we're going to run report, and we're going to pull up the illustration. All right, so here's our illustration. We've got the client, fit focused income. We're just going to scroll down. First page is usually just a summary page of how it looks with guaranteed and non-guaranteed. I like to go down, though, to the pages that show the details. So we're going to keep going. More summary. We do have the strategies on this page right here. We have our allocations. What are the caps and pars? What are the current rates? What's the charges? So that way the client can see that. We have some definitions. We have our withdrawal charge schedule, okay, that we've gone over already. Some more definitions. And what I'm looking for is the first guaranteed section of this illustration. This right here explains how a GLEAR works. And this right here is what I'm looking for. So this is guaranteed. I like to show guaranteed because that's worst case scenario. If this point forward the market never does anything, what does it look like? Now remember, they're not paying for the riders because they're not doing rate boosters, but they are paying a 1% on the accumulation for the guaranteed lifetime income rider, the standard one. So worst case scenario, you can see here accumulation value 250 continues to go down because they have to pay for that rider. Okay. But in year 7, their income is $16,180. And then if you scroll down to the yellow, this is that doubler. Now remember, the doubler goes for 5 years or until your accumulation is 0. We'll notice right here in that year, 4th year of getting the doubler, they get the money, no more accumulation. So that way, that's why the next year it goes back to the regular income of 16,000. So again, that income stays in force, stays in place. The doubler is what goes away if your accumulation goes below. So if you have no accumulation and you need that rider, you're not going to be able to get it. You'll just continue to get that normal income. So again, this is worst case scenario. On the far right, we have the rider calculation. Because the client is paying for the rate booster for the standard GLIR, that's why the income is based on that 292 in that first year. Okay, if you go to this column, the available lifetime income, this will show, hey, this is what your income would be at these ages. So in year 2, it would be 11,000. Year 3, 12,600. Then if you go down to year 7, 16,180. So that's where we get that 16,180 from. But you notice the benefit calculation base is a lot higher than accumulation because the benefit calculation base is going simple roll up by 4.5% and it got that 12% booster. So we scroll down and we're going to look at now what's the most recent 10 years. Okay, so that was worst case scenario. Now what does it look like with a hypothetical? So you can see here accumulation value is going up because of right here this annual effective account value rate, which is the interest. It going anywhere from 2 to 4, some 5s, some down near 0, not fully 0, but some down near 0, and what the account was credited. Okay, so again, income still 16,180 because that benefit calculation base is the same. All right, because again, income is based on benefit calculation, not accumulation. Okay, so we got to know those differences. And then if we scroll down, we notice here we have 3 years of the doubler, and we have the extra 2 years because we still have some accumulation value. All right, so again, 5 years or accumulation turns 0. And that's pretty much it. Pretty simple to go over. There's not a lot of moving parts. It's really, does your client want to pay those fees for the rate booster, and does the client want to pay for the GLIR? If they don't, you don't have to choose it, which is a great benefit of this product. You can go with absolutely no fees or a lot of fees, but a lot of potential, okay? And that's National Life Group's Focus Income Annuity. If you have any questions, please feel free to leave a comment in this video, send us a message. Make sure you subscribe to our channel to not miss any future videos that come out over the next few days and weeks. Y'all have a great day.